You just updated your expectations, your forecast for e-commerce. Tell us the kind of acceleration that you're anticipating.
Yeah, thanks for having me on. We published our fourth annual e-commerce disruption report yesterday, and in it we significantly raised our U.S. e-commerce forecast. We now expect U.S. e-commerce growth of 48% year over year in 2020, obviously a massive acceleration given the COVID demand. With that, e-commerce penetration rises to 17% of total retail sales. That's a 5% penetration jump versus last year. And it's really a big change because we've seen e-commerce penetration rise about 1% a year the past 5 years. But with the pandemic driving the demand surge, we're really seeing a big pull forward. And the categories that are driving it are big: consumables, food and beverage, home, among others. And so now we actually expect $1 trillion in U.S. e-commerce sales by 2022, which is 2 years earlier than we prior expected.
Now, John, you mentioned consumables, food and beverage. I would anticipate that would be a category that may slow down, go back to prior levels post-pandemic, once people can go out to restaurants or to the store more freely than they do now. Is that something that you anticipate to continue to grow, or have that growth slow down or revert back?
Yeah, we think consumables, which is personal care, household goods, and food and beverage, grocery, will actually be big drivers of growth going forward. So this year, with the growth, these two categories doubled, and they drove about a third. They're driving about a third of the incremental e-commerce spend. Prior years, they had been driving maybe kind of half that. So we think those two plus home and auto will be the drivers of e-commerce growth going forward. We're looking for 10% annual e-commerce growth the next 5 years, and those are the four categories that we think will drive it.
John,
the other thing I would call out is we saw online grocery users double this year per our data, and we think the train has kind of left the station, and people have found it easy to buy groceries and your consumables online, and we think that'll persist going forward.
Okay, we talk about the benefits of Prime Day, but we seldom talk about the costs, and there must be costs, or Amazon would have 3 Prime Days a year. So what are the costs involved here, either in margins or what, and how are we going to gauge whether this Prime Day was as successful as previous ones?
Yeah, so John, I would say, right, so Amazon's been investing in their last mile delivery the last couple of years. This is another thing we updated in the report. They're increasing their fulfillment square footage by 50% this year. They're increasing their delivery stations, which are around major metro areas. They're doubling them this year. So I think that's part of it. Like the fulfillment stuff is part of it. Yeah, I mean, they're going to be discounting. The margins on sales won't be quite as high for their own inventory. But I think Prime Day this year kicks off the holidays for Amazon, and really kicks off the holidays in the U.S. and around the globe. And because we're only a couple weeks from November, and then you get into Cyber 5, and then into December. So I think it's more about kicking off the holidays than the cost at this point.
Shepard Smith here. Thanks for watching CNBC on YouTube.